Hi, this is Brent with another chart breakdown for trade therapy. This morning, we're going to be talking about Tesla. We're going to be talking about a specific trade setup. Those of you that follow us on the socials may be familiar with this trade. This was the Tesla trade in April. This chart that you're seeing right here, we posted on the socials the night before earnings, so on April 21st. If you recall at the time, headlines and expectations going into earnings were really bad. Chart bros all over FinTwit, all predicting gloom and doom and failure in the markets and failure for Tesla. And it's going to be 2008 all over again. It's the great financial crisis. We posted this the night before earnings, indicating that we took a long position. And so this video is about how we did that. Tesla obviously has been in we're calling it reaccumulation. You can call this accumulation. It clearly went through a major markup period. This 7-year base right here is what we're referring to as the accumulation. This is where your institutional base is. This is a markup campaign. It then has gone through. We're calling it reaccumulation because we don't believe that there's going to be any further decline in Tesla. It has traded sideways in this accumulation or reaccumulation zone now for 3 years. So it's time for, and the bottom and volume. So for example, for it to come down or for it to have come down in April, it would have extended down below this low here, which if you recall in late 2022, that was the depths of the inflation interest rate hysteria. And that was bought up with a ton of volume, and volume has stayed high since then. So heading into earnings, we knew that there had been this big accumulation here. This is institutional buying here. Retail does not generate this kind of volume. So as price was coming down and had already taken out this low here, the question was, does it have enough stamina to go after this low here? Well, quick Elliott wave count, 1, 2. So A, B, C. Here's a 1, 2, 3, 4, and 5. So going into earnings, we recognized that we were on sub wave 5 of wave C of the last leg of a reaccumulation or accumulation type of a pattern. So we took it long. A great trade for us. We went long. We decided to, it also coincided, there's a gap right here too. So we decided to take the long, place our stop slightly below that. We didn't want to get stopped out because we believed that wave 5 was Tesla just did it. This is not a constructive place in the chart. So for a short position to work, it needs to have runway. And there's no runway here. So we took the long position, took a stop just below the 236. I think our stop was in around 138, something like that. This position up to today, today is the 10th of September, it's up 50%. It's almost up 51%. So great trade for us. That's how we did it. Not going to get into the details of where Tesla is at today. Just wanted to break this chart out for you. We will be highlighting Tesla soon. If you would like more details on this trade and additional details about Tesla and our long position, we're still long Tesla. Visit us on our website and subscribe to Clarity. You'll have access to our write-ups on Tesla, and we'll be spotlighting Tesla again in the near future.